This presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak YouTube update for October the 16th, 2023. I'm Mo Ansari, President of Compak Asset Management and host of Market Wrap. You can get the daily edition of Market Wrap simply by going to compak.com/media and you can download the app there. It's a free app. It comes on your iPhone, and then whenever I do the Market Wrap 1 hour broadcast, you will automatically have it downloaded to your phone, and you can get the other resources and also subscribe to this channel so you'll get the notification whenever I do a YouTube update. I'm going to talk a little bit about the market, the economy, technical analysis, and the week ahead. Let's start with the market. Looking at, it's been an unusual year so far that we've seen. Usually when we come out of bear markets, you can see that we've seen, well, about 6 bear markets since the early 80s of last 40 years. Every time the small cap usually leads. That's what we've seen. That's in orange. You can see that small cap is leading every time. This time in 2009, it was mid cap or equal weighted index. That did well then, and then the large S&P. But this time around, it is totally different. You're showing the large S&P leading, then equal weighted, and then small cap. It has been an unusual rally after. It's been the Magnificent Seven, and it's showing that the PE ratio on the S&P is so much higher. You take those 7 stocks out, the PE ratio is pretty low right now compared to just about average or lower than where it's a good value. The rest of the 493 stocks in the S&P, you have to pick those out, obviously have the right allocations. Again, the largest concentrated, largest 10 stocks it's much more concentrated, the highest ever, going back nearly, again, 35 years. So it's a concentration. How long will it last? People are looking for revenue. People are looking for big companies. People are looking for companies that are solid. And more money has gone in. Just like in 2011, we were talking about, I was looking at the tech companies, the large tech, the Microsofts of the world, and saying, these are great companies. They're not going out of business, and they are going to do very well. 10 years later, everybody's saying, oh, these are large companies, but the stock has gone up 10 times from where it was in 2010 and 11. So I think we are going to continue to see these companies do well, but the tremendous growth we've seen is history. I think the growth we're going to see are with the innovative companies. We're going to see companies that are solid companies but have much more growth at the same time. So finding those companies is going to be something we need to look at. Consumer sentiment is still falling, continues to come down. And that shows you, I believe that the economy is going to slow down in the second half of the year. We haven't seen that in employment yet. We are seeing some indicators that we are seeing anecdotal evidence that we are starting to see some slowdown. But once unemployment goes up, it's a lagging indicator, not a leading indicator. Once unemployment is up, we are already usually in a slowdown. On Wednesday, I'm going to be in Scottsdale, the last seminar of the year. If you want to come and attend, go to compak.com and register. On the 14th, I'm going to do a webinar next month, so register for that. Looking at the technicals, again, we are right at the 50-day moving average for the S&P, 4402. I mentioned this gap a couple of weeks ago. This gets filled at 4400. I said that's where I think the 50-day will come down to by the time we get there. It's 4402 now. We're at 4380 or so today. We need to get another 20 points, get about 4,400. If we can, then we look at this, 4550 as next resistance, 4,500, 4,550, and then obviously 4607. That's the high that we made in July, and 4637, that was the high from last year. So we have support now at the 20-day moving average, which is 4344, and then the 200-day moving average at 4224. As long as we are above 4224, market looks good. We get above 4400, looks even better. Weekly charts, 4414 is the 20-week moving average. Again, if we can get above that, we are pushing it, getting close to it. We were close to 4380. Today is the high. Then we got 4637. And the long-term targets, as I mentioned, this is wave 1, 2, 3, 4, and 5 should take us back up to 5,000 to 5150, maybe next year sometime. That's what I'm looking at. NASDAQ, Again, very similar picture, 50-day moving average, 13,584. We're 13,590 right here. We're right at the moving average, the 50-day moving average. Then we've got the 20-day moving average, which is 13,454, and then we have 12,5, which is a 200-day. Again, long-term looks good. Wave 1, 2, 3, and we're starting the fifth wave. If we've completed wave 4 down here, wave 3, 4, 5 should take us much higher. We're looking at all-time highs at 16,000, maybe even higher. I'll do a projection from here later on in the next few weeks. Looking at the 10-year note, we hit that 4.93 right here was my target to 5.03. We got to 4.9, backed off from there. We might bounce around here. I think the biggest threat right now to the market is geopolitical events, what happens in Israel and Gaza. As long as the war is contained between Gaza, the Hamas and Israel, that will, as I said, it's a terrible humanitarian situation, terrible terrorist attack that we saw in Israel. But from a financial point of view, it has no bearing in the short term. Long term, if we have an expansion with Hezbollah, as I mentioned last week, coming in from Lebanon, or more attacks from Syria, that changes the whole equation. I don't think that's going to happen, but there is a possibility that could happen. That'll push rates lower, but it'll also put rates pressure on the market. We got support at 4.6, 4.33. Those are two support areas. Today we're at 4.71 as far as the rate is concerned. Gold market plummeted, made a fifth wave bottom. After that, we've seen a rally right at the 200-day moving average, which is 1938, closed at 32 today. So we're right there bouncing around here. We've seen a huge rally after we completed wave 5 to the downside. And now probability is if you break this downtrend line, which you can connect right here, if you can break above that, that would be positive. Crude oil, wave 3, wave 4. We could see wave 5, and that is very interesting, but it needs to get above. I think we'll see a failure of wave 5 right somewhere around here and turn back down. We'll have to wait and see. Those are my thoughts. Again, the big thing that is going to drive the markets is earnings. Earnings starting to come out. They're going to come out better than expected, and if they do, that'll give the market the impetus. Fed is still on hold until we get some more information. They're not doing anything November 1st. Then we'll have to take a look at the December meeting. Probability is about 30%. I still think that they're done raising interest rates in July, as I said 3 months ago. Everybody's saying, oh, we're going to get 1, 2 more interest rate increases. I said, no, I think we're done, and I'll still stick with that analysis until I see otherwise. Those are my thoughts. Those are my opinions. Again, don't forget to download the daily edition of Market Wrap, 1-hour broadcast every day. Download it to your iPhone simply by going to compak.com/media. If you want to come and meet with us, set up an appointment. We'll be more than happy to sit down with you. Have a wonderful week. I'll talk to you next week.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.